Can you give us a little taste of like your journey through the world of gaming and high-end candy and everything else you've played with, like up to starting Open Sky?
I've had a very weird career. So I started in video games and then I jumped to creating a candy company. Then I started a VC, and there's really no, good connections between any of those. So it's kind of weird, but I jumped into video games because I was passionate about video games. I played video games all the way through my business degree, and I didn't want to do what all the other MBAs were doing. I didn't want to, go to someone's, marketing department. I didn't want to go into high finance. And I just had a big passion for video games. So I joined Activision in the really early days. I was like employee, I think 48 there. And I started as a producer, then I became a director, then I went into kind of project management. And then I had an opportunity to break away and form my own developer, which was called Pandemic Studios. Obviously, the name did not age well, but at that time, there was not a real pandemic, so it made a lot of sense. Grew that company to 2 studios, around $60 million of revenue. Had a great exit at a really good time to Electronic Arts just before the 2008 recession. Stayed on at EA for a couple years, but they hated the big, public company culture. And then I met my now wife. I took her out on a date to go see Willy Wonka and the Chocolate Factory. And we came out of there going, why do kids have all the fun? Where's the gourmet candy for adults like us that have really big sweet tooths? And so out of that, we started Sugarfina. While we were dating, we were traveling the world, discovering all this amazing candy that wasn't coming to the US. And we convinced all of these, centuries old artisan candy makers to let us be their exclusive kind of candy importers into the US, created a beautiful brand out of it, and kind of created a whole new gifting opportunity out of candy that never existed before. And it was such amazing fun. We got to invent candies every day, like, champagne gummy bears and scotch cordials and things like that. Elevated candy to where it used to be. 100 years ago, candy was a really special experience, but since then it became a commodity where you would shovel candy out of a plastic barrel and weigh it by the pound and, nothing special about it. So first 5 years of Sugarfina were amazing. We didn't spend a single dollar on marketing, just word of mouth where customers would buy our candy and acquire new customers for us. It was a fantastic run. Last couple of years were really, really hard, though, and all the complexities of running this candy empire kind of caught up with us. Unfortunately, we did not have, the great outcome that we had hoped for, for us and our investors at that end of the journey. But, I can talk about that for hours. Somehow then I turned to the dark side and decided I want to go into becoming a VC. And I'm just joking, though, because I really do enjoy now being in a role to support founders on their journeys, give them the capital they need, take all the learnings that I've developed over the years and kind of help them avoid the mistakes that I made and, allow them to, really realize their dreams.
Do you find you have learned more lessons in gaming versus like consumer products that, translate to being the advisor that a VC is to founders?
Yeah, honestly, regardless of what industry you're in, you're always going to take away learnings both on. I think you can rise above industry, whether it's video games or candy or whatever sector it is, and I think there's certain lessons that you can take with you across the board. How to identify great talent, how to nurture that talent, how to motivate that talent. How to be a great manager is a really important lesson, I think, regardless of sector. Identifying a problem that needs to be solved, coming up with a really clear and succinct way to solve that problem, thinking about how do you defend, how do you create a moat around that? So, at Pandemic, we were known for creating a very certain type of game, an open world game. Like we did things like Star Wars Battlefront, where you can kind of run around any world and be, any type of character, run any type of unit, be any type of world. And that really set us apart from other game makers. And I took that same sensibility of differentiation and innovation to Sugarfina. And I also take that to Open Sky in terms of what kind of opportunities we look for. So,
Wow, I can definitely pick up on all the energy you have around being a like a founder and an innovator, an entrepreneur, and a operator. How do you resist the urge to come back to the light side all the time?
how do I resist the urge to become an operator again?
Yeah.
Honestly, I'm failing at that because right now I am dreaming up my kind of third venture right now. I'm not going to announce it here on stage, but I think one of the things, talking about differentiation and how do you stand out, I think one of the things that me and my partner bring to the table at Open Sky is that we were operators. We have been in the founder's shoes before. We know what they go through, all the ups and downs. And I think staying current on that will allow me to become, to continue to be a better investor. My partner has already started kind of a side hustle on the tech side, and I'm very eager to kind of jump back in on the consumer side and start something new there. I think it will allow me to keep my edge, allow me to stay current, really understand the ups and downs that founders today are going through, not just what I might have experienced, 10 years ago. So I am failing at resisting that urge to get back to your question.
Got it. Well, it sounds like you're also taking advantage of that to keep yourself current, and I can imagine that the inverse is true as well. By having been a VC for the last few years, you're
Mm,
much more up to date in what's
right.
the world looks like right now. Given kind of the context of this event, we mostly use this stage for delivering pitches, I'd love to kind of dig into that topic with you for a little while, maybe from both the operator and the investor perspective. I imagine you hear a lot of pitches.
A lot. Yeah.
Yeah.
Me and all the investors here, we easily see dozens of pitches a week, if not
Mm.
more. Yeah.
So I think that keeping that in mind is often something that's easy to forget and important to have, is that when you're pitching to a professional investor, they've probably heard 10 or 20 already today.
Yeah.
So do you know either high level, or if you have a specific example, like what hooks you in the first minute?
I think everything in my mind comes down to telling a great story.
Yeah.
To your point that we are seeing pitches every single day, it's easy, to get glassy eyed and just, I've seen this before. So you need to stand out. You need to tell a really compelling story. And I find that the founders that are the best at telling a story are the ones that I typically end up backing. You have to tell a great story in order to learn that capital, which is so important. You have to tell a great story in order to attract the best talent and retain that talent. And ultimately, and most importantly, you have to be great at telling a story to your customers and convincing them why is this a product that they must have and continue every single day to show up for and pay and engage with. And so I look for that in a deck, and I look for that kind of focus and clarity in a deck. And it goes beyond just kind of the visual story of having, compelling visuals, but I need to see them telling me a story. So what is the problem they're trying to solve? How are they going to solve that problem? Why are they, as a founding team, uniquely set up to execute on their vision and how they're going to solve that problem? Do they have a really good understanding of all the other competitors out there who are trying to solve the same problem? And what is it about how they're approaching this, either as a founder or through their network or go-to-market strategy or how they use, capital or whatever it is, that will allow them to do it in a way that really builds up a moat? And I think, Anthony had asked that question earlier. It's so important. Like we were just talking today, Amy and I and Derek about in a particular sector. Oh, I've seen 20 pitches there in that particular, sector. What is it? Which one do I credibly believe is going to take a little bit of a different approach that is going to allow them to win versus everyone else? And you don't have to be the sole winner to do well. You can be top 5 and top 10, and that's still great. There can be multiple winners. But at the end of me looking at this deck, you have to convince me that you guys are the ones to do it, that you have some unique advantage in your go-to-market strategy, that you're going to be able to run your business at better margins, that you even understand what margins are and you understand what your cogs are. But how all the different ways you can approach solving this problem, why should I believe that you're the ones that are going to win? Because ultimately, what you're asking us to do is put our capital on the line there. So you have to be convincing. You have to tell that convincing story. And I can't tell you how many times I see a deck where I'm not convinced by the end of looking at that deck.
Does anything stand out, like a pitch you've received either recently or that you just remember that you just kind of knew?
Yeah, I don't necessarily have like a brand name or a company name that really stood out. I mean, there's certain decks that stood out for just telling the story in a beautiful graphical way, which, some investors, respond really well to and you should pay attention to. Um, but no, it's really hitting those marks. It's being thorough, it's being thoughtful. It's don't have me get to the end of the deck and have 100 questions, left over. And granted, sometimes you only have 3 minutes or you only have 12 slides or 20 slides to get that across. But all of the core things I should have answers to, and I should be really excited to call you up and engage you. I should feel giddy at the thought of talking to you more about this opportunity and wanting to be, a part of it. So, for me, it's really those ones that hit those high level notes and don't leave any of the obvious stuff out. It's always really suspect when there's like no slide on the competitive landscape or they just kind of gloss over what their team brings to the table. It does nothing for me if I see a bunch of pictures and titles. I don't care about that. I want to know why, what is it about your team that's going to make this vision, a reality. Yeah.
Do you think there's anything we can learn, like from maybe the opposite of like a really ineffective pitch, either like a total train wreck or
Oh
maybe
my
just a
God. Yeah.
common pitfall?
Unfortunately, I see a lot of train wrecks, and it sucks because, there's a lot of hard work that I know that goes into it. And someone's had that passion and vision and taking the time to put that all together. And the fact that it found its way to my inbox, it takes a lot of work. I mean, believe me, having been on the other side as a founder, I know how much work that goes into it. But it's either, it's the opposite of what I just said. It's missing one of those core components where they just kind of glossed over something. But I'll give you I hope this doesn't come across as small-minded or petty, but when you're backing a founder, you have to have confidence that they really pay attention to detail. And it's the little things. And when I see a deck, this is just an easy thing to fix in this day and age. When I see a deck that has formatting issues and spelling mistakes and typos, I turn my brain off right away, because if you can't bother to get that, then I'm not confident that I write you $1 million check that you're going to be a great steward of your capital, that you don't have that attention to detail. It sounds so bloody petty, but if you can't get that right, especially in this day and age with all the technology that can help you, make sure you put your best foot forward, that tells me you're not really paying attention. So it's kind of a stupid example, but it's a very telling example. And I am often so surprised when I see decks come across with just really easy to spot sloppy mistakes.
Sure.
So
We take a very similar approach in that we believe that at Nerdstage, however you show up in communication anywhere is probably how you show up in a lot of places.
yeah, yeah,
And yeah, if you're gonna ask for $1 million with a bunch of typos,
yeah,
where else are you gonna cut corners?
yeah, yeah. And look, there's a lot of things. I don't want to give the deck too much power either. Deck is super important, but it's just one component. I mean, spending time with the founder and the other key team members is super important too. So we might get past that stage where we see an amazing deck, kind of answering all the core questions, and then we get on the phone with the founder, and then that's where we drop off. Maybe they come across as super arrogant, or we try to have a conversation with them and there's no curiosity on their part, or, we ask them questions and we just get very high level answers, not, we're not getting indications that they've really thought deeply about something. We're really looking for people who are telling an authentic story, are really passionate about, or bringing a lot of passion to what they're doing. But also, I want to know that these are good people, that they're high integrity, they know how to put together a good team. If they put together that good team, they're going to be able to manage them well and hold on to that talent, that they can inspire their people, that they can communicate well. There's a whole bunch of additional things we start looking for after we get, to that stage. But also a big thing is I want to see some humility. I've been on this journey before. It can flatten you multiple times when you're being an operator. There's always something that's going to happen that's going to take you down a few notches. How do you get back on your feet? How do you think about problem solving? How do you deal with all the hundreds of things that are coming at you at once? We're also spending a lot of time really evaluating, is that person resilient, or not? Are they going to be able to survive the inevitable ups and downs that are going to come at them?
Yeah, there's a lot to that. And I'm curious, like, to dig deeper a little bit on the identifying the ability to build a team. It's hard enough to build a team. I'm curious about, like, on the investor side, how can you get into a couple conversations and get a sense of whether this founding team could build a great org?
Honestly, it's really hard. I wish we had I wish I had a magic, formula there. I think I do rely on my founder instincts a lot, having built multiple teams, along my entrepreneurial journey over the years. I think I have kind of built up some instincts. I mean, first and foremost, obviously you take a look at, has this team done it before? Where have they done it before? Having a conversation with them on, what's gone well and what's not gone well. How did they deal with those moments? How did they bounce back? What's their philosophy on management? What do they look for in the talent that they're bringing on in their team? A bunch of, questions like that. And ultimately, you're just trying to get a feel. I mean, look, I wish we can spend years really getting to know the teams that we're betting on, but we don't. Things move really fast. Deals are moving fast. We have to rely on our gut instincts, a lot. So.
Everything's moving really fast right now, with automation and AI and scientific breakthroughs, and just kind of everything seems like it's coming faster and faster. Um, since you're on the VC side of that, you're probably getting several fire hoses coming at once. Have you either seen new challenges that you're advising people or taking on as an investor and trying to identify who's going to be able to kind of surf the craziness of the waves that are coming in 2026 versus maybe the last 5 years?
It's interesting, with this generation of entrepreneurs and founders, they are really comfortable with this pace of change. And they have I'm not getting the sense for the right founders. I find that they don't feel overwhelmed by it. They feel really excited by it and they're energized by it. And oh my God, I mean, for me personally, what an amazing time to be starting a business right now. When I started Sugarfina in 2012, and then fast forward to today, if I had even a fraction of the, types of tools and the power behind these tools, we could have done so much more. I mean, it's just so exciting. So I look for founders who are energized by it, excited by it, steeped in it, really, conversant in all the different tools and technology, and I see them actively using it. And a great sign to me of a team that really gets it is one that is confidently running their business and showing product market fit and traction and great KPIs with exceptionally lean teams. And I'm seeing that more and more where you are getting like, multiple $1 million ahead of revenue now that used to take 5 or 8 times the number of personnel to be able to run that same business. So I'm kind of seeing that now in headcounts. Like, I'm looking at Fishwife up here, and it's one of our star investments on the CPG side in our portfolio. We invested in them in a fairly early round, and I think they had 3 team members back then and probably doing, $5-6 million of, revenue. And they've grown a little bit. I think they're at 10 team members, and I'm not going to say the revenue numbers out loud, but they have skyrocketed and they have just catapulted ahead. And I look for that. I look for that lean DNA, and I look for those teams who, know how to leverage technology to accomplish a lot more.
So it really is not just kind of software and robotics companies that you're seeing. It's a new paradigm for the next confection brand and Fishwife and companies like that.
Absolutely. I mean, as I'm thinking about my next brand that I want to start next year, I'm convinced I can do this with a super lean team. And I don't even know if I have to have, I mean, for a while, I'm hoping to be fractional, and just, take some expertise here, some expertise there, and with the right mix of technology, get really, really far before, you actually start building that full headcount. Yeah.
Does that change like how the next version of venture capital you think looks? Like, does this mean you need to raise different amounts of money at different times and maybe less?
Yeah, I mean, I do. I mean, obviously, it depends on the industry. I mean, there are some industries where you just can't avoid, raising a tremendous amount of money. For the industries I'm focusing on, the consumer brands and the technology they need to thrive, obviously, there's some capital use you can't avoid with consumer brands. You have to have inventory, for example, and things like that. But yeah, I'm absolutely looking for a very lean DNA, that very scarcity mindset among founders, and I can see how they can do a lot more with less. So you really, sometimes I'll encourage founders just to raise a little bit more capital, beyond their budgets, just to have that room to maneuver and have that flexibility. You never know what's going to happen, but you can do so much more with less now, which is fantastic for us. We would rather, frankly, write a check and not have to have those companies raise again for a really long time, if ever. I mean, that would be ideal for us from a dilution standpoint.
Yeah, that's really interesting. And it's been on my mind. So I'm glad we get to chat as you're not only having run a fund, but getting ready to raise another one. Do you think that this will change like how you actually look at like building the fund itself and like the timelines you might expect for liquidity events? Or when you can and can't get into investments?
You mean how technology is?
Yeah, or even just like we were talking about, like the ability for many teams to actually get really far, maybe with just the seed round.
Yeah, no, I think teams can get really far, either, bootstrapped. I think you're seeing more and more teams can get farther and farther bootstrapped than what we saw in the past. They can make those dollars stretch a lot more, which is fantastic for us. Because look, not everything is going to go the right way out of the gate. So if they have a little bit more cushion there to pivot, fantastic. And we've had companies do that in our portfolio. Some don't successfully pivot, but just to even have that room to pivot, to, to discover, to explore, to, change some of their assumptions, to react to the feedback that they're getting from their customers, if they have a little bit more room and flexibility to do that before they have to put their hand out again, is good for us and good for them. So that's great.
Right. And we heard from Eric a little bit about some of the more like crowdfunding type, if you will, newer, more flexible approaches to fundraising that can sometimes let more people, including say customers or fans, into the ownership conversation. Do you have any either experience or predictions in where that side of the investment landscape's going?
Mixed feelings on it, honestly. On the positive side, yeah, that's fun to be a consumer and have the opportunity to invest in your favorite brand and be a part of the story. From the brand side, you get extra level of connection and engagement with your customers, in that if they have that opportunity, to be investors. However, I've seen the dark side of that as well. I see brands that go out there and wildly inflate their valuations and take advantage of the fact that most of these mass or consumer investors don't have the tools needed or the expertise to be able to properly value the investment and to properly assess, is this an investment that they're going to actually get a return on their capital from? I am fortunately, I'm seeing more abuse on that side of things than the positive side. I, I hope I'm wrong. I hope that maybe continues to mature or there's more protections put in place. I don't think it's enough that those companies just have to publicly disclose their, annual results. So I am worried about that. But as a founder, yeah, in some ways, it's a much easier way, to raise the capital that you need. But I do worry there's going to be a lot of wreckage left in its wake.
Yeah, no, that makes sense as well. It's certainly a good idea to be careful with your dollars. I'd love to get a little bit of your perspective on where we are, Los Angeles, as a innovation ecosystem, as a place to start a company, and as a place to be an investor. Like you've got some experience here, and you're obviously choose to maintain being here. What are your thoughts on things that you've seen work, and what do you think is coming next as far as opportunities and challenges?
I think LA is fucking amazing.
Me too.
We have very few cities have such a congregation or confluence of so many different industries and so much different talent. But we are just a talent magnet. There's just so many industries to draw on, so much experience to draw on, so much capital here. It's such a big market. So as a place to try out concepts, it's fantastic. Just Venice alone, which is where I live, and obviously I'm gonna, be a cheerleader for. It's incredible. I think like 20% of my consumer brands are just in Venice. There's something magical happening in this kind of Marina, Venice, Santa Monica, area right now on the consumer side that is just fantastic. I don't know what's in the water, but I just think this area attracts a certain type of, go-getter or independent thinker or someone, who wants to try things a little bit differently, but there's something really working well here. So really happy to be based here, investing here, being in this community. It's super energizing. And I know, New York, you can probably say the same thing for, but there's not a ton of places, I think, in the country that you can say that about. So I feel very lucky to be here.
Right. Yeah, likewise.
Mm.
I know we've got some tacos coming up, but I think we've got time for a couple of questions from the audience if anyone's got one.
My question to you is, some products or some brands just inspire people and they're very successful. They're not solving any problem. They make people dream and they make people want those products. Why am I hearing from all investors, yes, you need to tell us which problem you want to solve?
You know what? I'm glad you brought that up because actually I want to adjust my answer. Great brands in my mind make people feel something. And you help consumers, feel that connection with that brand. Sometimes that's a worthy problem to solve. So if I felt awkward about holding a bottle of water at a bar or a party, Liquid Death solved that problem in a way by making me feel cool holding a can of water that said Liquid Death with a melting skull on it. It made me feel like a rock star, like I was super cool. So it was by creating that connection and creating that feeling, they were in a way solving a problem. Did they reinvent water? No. I'm sure there's a lot of other brands that have great, water there. Were they solving the problem of I couldn't get water at a bar? No, I could get water on the bar. So they weren't solving those types of problems, but they did allow me to engage in their product in a way that made me feel real cool and did solve a problem in that way. So I agree with you, or that's another way to look at it. And I agree with you that could be in essence solving a problem.
Yeah, that's a perfect question for someone who started a gaming and a chocolate company.
That's right. I try to make people very happy with both products, either a sugar addiction or a video games addiction.
I think we got time for one more question if we've got one. Anyone want to help close us off?
When it comes to actually like starting your own business, how did you, I don't know, get brave enough or set up your finances in a way where like, all right, I am deciding to do my own thing. I'm basically potentially going to lose this paycheck and just see what's out there. What was the mindset for you to do that?
You got to be a little nuts. Honestly, it's scary. It's really, really hard. When I was working at Activision, I had a great job, a lot of responsibility. I had a great paycheck, but I just had a passion. I genuinely believe that I can make better games, I can make them faster, and I can make them more affordable if I was not doing it inside of Activision's corporate structure and doing it outside. And I tried to mitigate, the downside by I negotiated a deal with Activision that allowed me to take the equipment out, the teams out, or our technology out, and I did a 2-product deal with them. So I had the budget to pay for the games that I was making. So I was able to mitigate some of the, that anxiety around taking that leap. But, obviously I didn't know for sure that we were going to be successful or not. So you try your best to either save up enough money, to do it in a way where, the cost will be really low for you, to do that exploration. Maybe you give yourself a set amount of time. Hey, if I can't get this going or prove some product market fit with what I'm starting in X amount of time, that's okay. I'll give myself permission to then rejoin the corporate world at that point. So if you set some parameters or you find a way to mitigate, some of that risk, it'll make it a little bit easy to take that leap. But it is a leap, and you got to be a little bit nuts to take that leap because it is really, really hard. You're never going to be able to 100% offset all the risks or anxieties that go along with taking such a big jump. So you got to be really convinced, you got to be passionate, you got to be a little bit nuts. You have to take some risk there, but there are ways to kind of ease that transition as you're doing it. And I'm happy to talk about it more after
Thank
this.
you.
Yeah.
Oh, that's a great answer. Sounds like you're making creative deals and learning that you can't get a no if you don't ask. So you might as well try and maybe get a yes too.
Thank you for giving me this opportunity to share my experience with you guys.
Thank you for joining us for this episode of the Nerdstage Podcast.